Wanted to go live. It hasn't been while. Maybe it's been a whole 30 minutes, but I had this on my list of things to talk about last week. Didn't get to it, and I've got a spare 15 minutes here, so I wanted to knock this out really quick because this is really speaking to what has been going on in the video space, in the video conferencing space, and my last video I was talking about where things are going in the live streaming platform, on the live streaming side of things. And what I'm noticing is that from 2020 to 2022 there was just a huge influx of cash. And one of the things that I always personally get really mad at myself about is we have not raised nearly enough money to help grow our company. Now, we've probably stunted our growth because of that. The caveat to that is we didn't just keep building and building and building and really rely on investors to keep everything going. We focused on working directly with our clients. We focus on customer acquisition. We continue to focus on marketing, on our sales process, on building a solid product that generates results, that allows more people to talk about it, give referrals. And not that referrals is a strong source of business for us, but the idea that we continuously provide value, show case studies, show where people are generating revenue, generating more leads, and how our platform is sticky, where people, if they leave it, it's not going to be like they can just replace it with another meeting solution. They have to go figure out how to integrate their whole business and tie up a bunch of other softwares to replicate the success that they've had with us, right? And so what I've noticed with these other platforms, these other companies, very heavy in the Valley or New York, whatever it's going to be, is when it brought in an investor, they were really good at fundraising, right? They continued to bring in more money, and whether it was raising $100 million rounds, $10 million rounds, that was what essentially was keeping the lights on for a lot of our competitors. And they weren't really building the business. They were building everything else but the business. Maybe they were growing on the technology. Maybe they were doing cool trips. I don't know, right? But it wasn't really building on the business. And so for today, I am talking about Hopin. And Hopin is, it's a cool platform. It has a way to they try to consolidate a lot of events, right? And they own StreamYard, which is a competitor to what I'm using right now, which is Restream. There's no reason. I signed up for Restream. I don't know. Maybe it was a money thing. I don't remember. But now what they've done is they've got different parts of their business, and I'm going to go to their site and kind of break it down, because they've sold a chunk of their business for $15 million. Now, remember, they were worth $7.75 billion a year ago. So when you think about the dynamics of that, you're selling your company for pennies on the dollar, right? And, RingCentral is a solid company. They are public right now. RingCentral, the backstory with them is they were a white labeled version of Zoom. So they had an agreement with Zoom. They had to use the Zoom product and only use the Zoom product up until their licensing agreement expired. Since then, they've been prepping behind the scenes, ultimately to hit a lot of other areas. They have a strong M&A department, mergers and acquisitions. They have been developing. They just haven't been able to release any of their updates since all these changes, right? And so now their license with them expired. They're continuing to build or buy, and they're growing in a great way there. And they are also a public company, so they've got lots of resources and things like that to kind of make that happen. And so as far as kind of what I'm talking about here, this is the article, right? So right here, I guess I should probably focus on not me here. So here, 2-year-old event starts up. Hopin boomed in the pandemic. Now it's a $7.75 billion business. Now, when all this happened, being in the video space, you would be able to get someone's business for us if we picked up the phone and talked to a customer, because everyone was flocking to all these other platforms, and all these other platforms said, we're too busy for you, we have a 3-month waiting list, we'll talk to you in 3 months. And these companies were saying, we need help right now. So I would work long hours, and I would try to take as many phone calls as possible, try to onboard people, give them as much success, provide online marketing services to help them grow and add more of a technology and marketing infrastructure into their business, because we already have it and we wanted to use those resources for other companies. And that was the big thing. And so now that a lot of things have changed, Zoom is making people go back into the office, and all these companies' valuations are tanking. So that's kind of interesting, right? And so here, this is kind of a breakdown of the deal. So it says they're to pay them $50 million for startup. I think it's not sharing. Let me share this tab instead. Here we go. So they're saying that if I want to get rid of this, I'd love to. So RingCentral to pay $50 million for startup Hopin events management assets. Okay, so basically what that means is it's not 50, it's 15, because it's 15 up front and 35 if they achieve specific performance targets. Now, I've been part of this system. It's very rare that a company is able to hit these type of performance targets because they're very ambitious. And if they are 1 decimal under that goal, they're out, right? So that's pretty much how that works. And so as far as the actual company, so like I mentioned, if you go to Hopin, you've got StreamYard, you've got the create a live stream, and now the sessions, if you want to run a webinar. So now if you go to RingCentral, they will talk about that. And then you got Hopin events. So RingCentral is really dipping their toe into the webinar, into the event space, as far as how they're trying to grow and scale what they're doing. And these are the two assets that they sold for $15 million in cash. Now, if you look at what we have as far as like our infrastructure right now, that was probably an amazing move for RingCentral, because of the amount of time and money and resources that it took for us to have a super solid webinar and event hosting and marketing automation solution for a company at that level. I mean, they basically stole it, right? And so that is kind of the really amazing thing that has been going on in the event space. Because if you're talking about all the people jumping ship with Zoom because of everything with their AI and recording, and first it was the Chinese servers, now it's how you have to agree to their new terms and conditions as far as how AI is going to be watching basically all of their events. So there's a huge privacy issue kind of going on there. It's actually banned for a lot of major corporations. Why wouldn't that go off right now? So there's a lot of major corporations that says you can absolutely not use it. We have to keep our content, our meetings, our events very confidential. We don't want that going anywhere else. So you've got that. You've got what's going on with Hopin. You have people consolidating. We did the acquisition with Business Hangouts. So you were, imploding or thriving basically during that time. And so now that the tide has kind of gotten a little bit more stable in this market, and you're moving towards the live streaming and the transactional space and generating more revenue and things like that, that's the next evolution of where everything is going. And so now there's a lot of things that you're going to be able to do moving forward when it comes to taking your audience from your social audience, whether it's Facebook, whether it's Instagram, whether it's YouTube, whether it's Google ads, now moving all that attention into your own ecosystem where you own their emails, you own their data, you own and you understand all of how are people interacting with your content, ultimately to improve the content itself, the promotion around that content, and what people are most interested in, right? And so that is where everything is going. And I'm going to be actually doing a training. I don't know if it's going to be tonight or tomorrow on how to take your online presence, and whether you are using your own face, you're using other people's content, and how to actually take that attention, move it into your own ecosystem so you can turn your social media followers into customers. And you want to turn social media followers into leads, turn those leads into customers, and how to really build a relationship with your audience at scale using some of these different models. And so I have a couple different trainings. I've got the consistent converting webinar model. I have how to turn your social media followers into customers. And I've showed how to kind of scale from 0 to 50,000 in revenue, and how I've done that over 83 times between all of my clients, and how we've kind of helped them scale online. And so there's a lot of additional content and value that we want to continue to provide as far as how you can really understand and break down and leverage all the information that's going on there. I'm also going to be releasing my debunking series. I got some good feedback on that as far as breaking down some of these, super viral, like quote unquote influencers, and what they're doing to generate more revenue online, and how ChatGPT can build you $20,000 a month business, and what that actually means, because you see a lot of these viral posts. I'm going to kind of be breaking that down, dumbing it down, debunking it. Some of it's real, some of it's not. A lot of it just assumes that you don't have to do any work for yourself, which is all of that's just not true, right? So I'll talk about that as well. So that is I've got a call coming up in the next 10 minutes that I have to prep for, but that is kind of what I wanted to cover as far as what's going on with Hopin, what's going on with the video conferencing market. It's been too reliant on major capital and not enough on adding value to the actual end user for them to stick around, use it, and have it be a major asset to their business to help them scale and grow online. And that is what we want to focus everything around. So again, thank you so much. I really appreciate you watching, and I will be back soon.